Much like the weather lately, the financial markets and mortgage rates have been warm and cold depending on the day. Last week provided a decent amount of market volatility. The markets were closed on President's Day, but hang on to your hat, we are starting to see real estate activity picking up. So here's a look at some of the current events and financial updates that we're seeing. The major economic data released last week sent kind of a mixed message. On one hand, inflation was significantly higher than expected. On the other hand, we saw consumer spending fizzle out in January. Now, overall, investors placed more weight on the inflation data, and we saw mortgage rates end the week higher as a result of that. The Zillow January housing report was released, and Zillow reported that homes priced correctly in January were still moving at a good pace, with the average days on market sitting at 29 days. Those that are not priced correctly are lingering, resulting in price cuts. However, the amount of homes with a cut was lower than it was last year, so an important stat to watch. You guys know this, we feel it, there is still a lot of competition. 26.4% of homes sold above the asking price, which is up 2.5% from last year and up 8% from pre-pandemic levels. I know you feel this too. Inventory remains tight, and there was an increase in new listings in January like we see every year, but it was much less than we are normally accustomed to seeing. So total inventory is still up only 1.5% from December, and it's almost 40% lower than pre-pandemic levels. Again, I know you guys are feeling that. So here's a look at two reports that came out last week, the CPI report and the PPI report. CPI report, the Consumer Price Index, is one of the most widely followed inflation indicators. In January, the core CPI rose 0.4% from December, above the consensus forecast, and 3.9% higher than a year ago. Now, Chicago Fed President Austan Goolsbee made some dovish comments in response to the hotter CPI inflation report, saying that higher inflation for a few months would still be consistent with the path back to the Fed's goal of 2%. He also said that the Fed focuses on PCE, which is the Personal Consumption Expenditures report, not CPI, for their 2% goal, and PCE is running much lower. He also said he doesn't support waiting until inflation gets under 2% to begin cutting rates, so they don't overcorrect, which had a bit of a calming effect on the markets and makes complete sense, right? We don't want to go into overdrive and then have to overcorrect backwards. Now, one important note, the one big reason the CPI has fallen from a peak of 6.6% in September, but is still above the readings of 2% we saw early in 2021, is that shelter or housing costs remained elevated and again were responsible for the largest portion of the increase. However, the CPI data measures shelter costs with a lag, and more timely indicators from other sources suggest that this component will slowly come down later in the year, which we've been anticipating. Other categories with large monthly increases included airline fares, food, and auto insurance. I'm sure you guys have seen a lot of the suits that have come out and a lot of the claims increasing auto insurance levels. Let's look at the PPI report. Adding to inflation concerns, the core producer price index jumped 0.5% from December, far above the consensus forecast of just 0.1%. Due to higher than expected inflation data, expectations for a reduction in the Fed funds rate have been pushed out until later in the year. While some investors not so long ago were saying that the first rate cut we would see from the Fed might be at the Fed's March meeting, most anticipate now that it will not take place until June, that first rate cut. So again, we will keep you updated there. A lot can happen between now and then. Here's a quick refinance update. If we have spoken to you about a refinance, we are still watching the market closely. With rates hovering in the high sixes, we'll continue to keep you posted as we see shifts in the market that may make financial sense for you. And lastly, so many of our clients are asking, is now a good time to buy, Lori? And I will tell you that there is massive opportunity in the market right now. Watch for our next video. We're going to highlight some of the opportunities we're seeing in this market and how you can take advantage of them.